Steve, it is great to have you.
Good to be here in Miami, a rising city, rising the rest.
Exactly, a perfect example.
Exactly.
I know we were on the main stage yesterday. We had a great conversation. We can continue that. You know a thing or two about big tech, having run AOL, seeing its dominance. When you look at the tech giants today and their dominance, do they stay on top over the next decade? What do you look for? Is it possible to sort of discern that quarter to quarter?
Well, in the long run, obviously they're terrific companies, will continue to be terrific companies, but 10, 20 years from now, the leaders will likely be somewhat different. Some of the leaders today will still be there, other new companies, perhaps some here in Miami today that are just emerging will surprise people and be big companies. That's the nature of creative destruction, the nature of markets, and we'll continue to see that kind of innovation.
At the same time, AOL, over its journey, tried to acquire companies like Facebook and YouTube, and you've seen these big tech giants actually doing that. Facebook obviously has had a string of acquisitions, Alphabet with YouTube. Does that help them stay on top? And what's the regulatory environment right now? You have Microsoft and Activision, but many thought this is going to be a much tougher environment to do. No,
obviously M&A is a way to continue to expand your portfolio, not just rely on internal innovation, but external acquisitions. And we did a lot of that at AOL with companies like Netscape, and then obviously with Time Warner and others. Getting the deal done is one thing. Managing that asset in a smart way is another, and the integration of those things can be a little bit tricky. And I do think with big tech now there is more scrutiny. I think some of the companies that might be thinking that acquisitions might be smart for them to expand their portfolio recognize that in Washington, Brussels, other places, there is a little bit more caution and there's a little more difficult path to getting those deals done. So that likely reduces some of their willingness to take a shot. But you'll see some of those, and over the next year or two, some of those will end up passing muster and getting done, and some probably will get turned down.
I mentioned Microsoft Activision, and that's a big deal. The regulators are taking a hard look at. You're sitting in D.C. right now. What do you think the chances are for that?
I don't know the chances specifically of that deal. I do think Microsoft's done a good job in the last couple of decades after having some real challenges 25 years ago. The government tried to break them up. There are antitrust issues in terms of unbundling the operating system and so forth. I think they learned that lesson and have been much more engaged with policymakers around the world, and that's actually positioned them well. They've been able to get some things done that others couldn't. So maybe they'll be able to pull this off, but I don't know enough of the details to know exactly where it stands or to predict what might happen.
Speaking of deals, the one that everyone is talking about, even here in Miami, is certainly Elon Musk's bid for Twitter. What are your thoughts on that, especially as someone who has founded a company, been CEO of a company, now works with a bunch of different startups? What do you make of that bid, and would that be good for
Well, I saw CNBC has a special on it today. So I think Elon Musk is for business news, what Donald Trump is for politics. It drives interest in ratings. Obviously, Elon's one of the greatest entrepreneurs of all time, and what he's built with Tesla and SpaceX is incredible. So having somebody like that get involved with Twitter probably is helpful from a product standpoint, rethinking what could happen. I think it's a little more challenging to think of what's happened on the business side, the profit side. He's talked about doing some things around advertising and so forth that might reduce the earnings of the company. So we need a little more clarity on that. And there also are going to be some of these kind of policy issues that play front and center. This idea of it really being an open public square makes sense at one level, but Congress, even before he made his bid, was talking about taking a fresh look at this 230 provision that was put in place when I was running AOL, and so they'll have a say in that as well. So it's great that he's looking to try to kind of shake things up and take Twitter into new directions. But I'd focus on what he can do on the product side, what would happen on the profit side, which will impact perhaps other interest in other investors joining him, trying to understand what the business model going forward would be, and then trying to understand the broader context, not just in this country, but around the world, around policies, around social media.
Carl said earlier in the show that Twitter punches above its weight. Its valuation is sort of out of step with its influence. And yesterday you told me that good companies to stay on top need to keep innovating. Is Twitter innovating?
I think they've innovated. I joined, I think, 15 years ago as one of the first users, and watching what's happened in the last 15 years, I think it's been very impressive. I'm sure there are things they could do that would be more innovative. They could be more agile. Any company, when it goes from dozens to hundreds to thousands of employees, things kind of slow down. So I'm sure there's some things that could be done to improve the product, but it's not the only thing that needs attention. There's the other issues that also need to get focused on.
And so, Steve, now you are CEO of Revolution. You have a number of portfolio companies, a few that have gone public over the last year, and a pretty tough environment for tech stocks, especially new listings. How are you looking at the IPO window right now, which seems to be shut? How does that get reopened?
I think we had at Revolution, we had a number of companies, particularly out of our Revolution Growth Fund, go public over the last year or so quite successfully. Things have slowed down in the last few months. I'm not surprised because so many companies were going public last year, and when valuations come down because of inflation concerns and just some general market reset, people tend to be a little more careful about new IPOs. So companies that were thinking of going public, even filed confidentially, have got to put that on hold. But, it's an open question in terms of when that IPO window might open again. Some think it could be as early as June. People think it will be more likely the fall. Time will tell. And what generally has happened historically is a major company goes public, and that then opens the door for others to follow. So I suspect that will happen this year, but I'm not sure exactly whether it's a summer dynamic or a fall dynamic.